Welcome to the Wealth Wisdom, where money has history and knowledge becomes power.
Imagine waking up one day and realizing that everything you have been told about money was incomplete. That the thing you work for, stress over, save, borrow, and spend, the very thing that decides whether life feels secure or unstable, is not what you think it is. Money is not wealth. Money is not value. Money is not earned. Today, money is debt. Debt is the oxygen of the global economy. Debt fuels governments. Debt drives corporations. Debt pushes families. Debt expands empires and destroys them. We live in a world where the number one product being manufactured is not cars or phones or houses, it's loans. Loans stacked on loans. Debt rolled into new debt. Borrowed money used to pay interest on borrowed money. A loop, a system, a trap. But this wasn't always the case. There was a time, not too long ago, when debt was considered dangerous, something to avoid, a burden, a personal failing, a sign of struggle. So how did we get here? How did something once feared and avoided transform into the foundation of the modern financial system? How did debt become the world's main currency? Today, we'll uncover that story. And once you hear it, you will never look at money the same way again. Where it all began, when debt was personal. To understand today, we need to step back, far back, to a time when money didn't exist yet. In ancient marketplaces, trade happened through barter: wheat for cattle, tools for fabric, grain for olive oil, simple, physical, tangible exchange. But barter had a problem. It required both sides to want something the other person had. Economists call this the double coincidence of wants. So societies needed a unit of exchange, something everyone agreed held value. Gold and silver became the default. Metal had weight. Metal was scarce. Metal didn't rot. Metal could be measured. And most importantly, metal couldn't be created out of thin air. But here's where the first seeds of debt appeared. Even in ancient Babylon, clay tablets recorded debts, promises to deliver grain or cattle in the future. Debt was not money. It was a pledge, a personal obligation, tied to one's honor and survival. If someone took too much debt and couldn't repay, consequences were harsh. Land was lost, family members were taken as servants. Lives were destroyed. Debt was dangerous, and everyone knew it. Debt meant risk. Debt could ruin you. Debt was to be feared. But as civilizations expanded, rulers discovered something. Debt was power. Not for the borrower, but for the lender. The rise of banking. When debt became a tool. By the Middle Ages, Italian city-states like Venice, Florence, and Genoa were exploding with trade. This is when the world first saw organized banking families. Names we still hear today: Medici, Bardi, Peruzzi. These families didn't just store money, they financed war. Kings and queens, desperate to expand territory or defend borders, borrowed massive sums from bankers. Suddenly, debt wasn't about feeding your family, surviving the winter, or paying a neighbor back. Debt became a tool for political power. And what happens when the most powerful borrowers in the world, kings, can pay back their loans? Simple. The bankers gained leverage over governments. The debt system wasn't just financial, it became political control. But something else was happening underneath the surface. The more rulers borrowed, the more bankers realized if money remains gold, our power remains limited. Because gold was finite. Gold had to be mined, stored, moved. Gold created a natural ceiling. And power hates ceilings. So bankers needed a way to create money without needing gold. They needed something that could expand endlessly. They needed debt to become money. The switch. From gold to paper. For centuries, paper notes were not money. They were receipts. claims to gold. If you held a note, you could go to the bank and exchange it for gold. This system kept bankers honest. They couldn't print infinite notes because people could demand the gold behind them. But then, slowly, quietly, strategically, banks began issuing more paper notes than the gold they actually held. They were gambling that not everyone would demand their gold at the same time. This was the birth of fractional reserve banking, a polite term for loaning money that does not exist. The more loans banks issued, the more the economy grew. And with that growth came profit, enormous profit. Debt was no longer a side feature. Debt was becoming the engine. But there was still a problem. As long as gold existed, there was still a limit, and a system built on endless growth cannot tolerate limits. So the next phase began. Enter central banks, the engineers of debt. Central banks were created to do one thing: control the creation of money. Not governments, not markets, not citizens. Central banks. The Bank of England in 1694, the Federal Reserve in 1913, the Bank of Japan, the European Central Bank. These institutions standardized something revolutionary. Money would no longer be backed by gold. Money would be backed by debt. Government debt, corporate debt, consumer debt, your debt. Every dollar, euro, rupee, yen, every major currency today is created through borrowing. When a bank issues a loan, new money enters the economy. When a loan is repaid, that money disappears. Money is no longer a store of value. Money is credit. Money is debt in disguise. This isn't metaphorical, this is literal. The world runs on debt-based money. The breaking point. When debt became infinite. The final step in this transformation happened on a single day, August 15, 1971. The President of the United States announced that the dollar would no longer be backed by gold. From that moment on, money became paper, digital entries belief, and nothing more. No backing, no limit, no anchor. This is when debt became the main currency of the world. Governments borrow money to run the country. Corporations borrow money to expand. People borrow money to survive. The global economy is now addicted to borrowing. It cannot function without it. If borrowing slows, the system collapses. This is why central banks push low interest rates. This is why you constantly hear about stimulus. This is why inflation never truly disappears. The system requires expansion, always expanding, forever growing, endlessly increasing. The debt must grow, or the economy dies, which means your future income is already spent before you even earn it. The fallout, what this system has created. Debt has become the reason housing prices keep rising, the reason education costs explode, the reason healthcare is unaffordable, the reason wages never catch up, the reason the rich get richer and the poor get poorer. Because the more debt exists, the more those who issue debt gain power. Today, the top 1% owns more wealth than the bottom. 90%. Global debt is over $350 trillion. Countries now pay more interest than they spend on schools. This is not an accident. This is the design. Debt has replaced gold as the foundation of money. Debt has replaced labor as the measure of value. Debt has replaced democracy as the source of power. We live in a world where banks control more than governments, and we never voted for any of it. Failed fixes. Why reform never works. Politicians talk about reducing national debt, balancing budgets, cutting deficits. But every promise is a lie. Because if governments stop borrowing, economies shrink, stock markets collapse, banks fail, unemployment rises, social unrest erupts. The system was built so that debt can never go down. Debt must grow, and it will until the system breaks. Today's warning: The next phase has already begun. Debt-based money is reaching its limit. To maintain control, central banks are preparing the next system: central bank digital currencies, CBDCs. Digital money controlled directly by central banks. Not cash, not crypto. Programmable money. Money that can expire, be limited, be tracked, be frozen, be controlled. This is not conspiracy. This is public policy, already being tested in China, Europe, India, the US. The future is clear. Debt-based money plus digital enforcement, IT's total control. The question is whether we see it soon enough to respond. 3 takeaways. 1. Debt is no longer a burden. It is the core of the global financial system. The world literally runs on borrowed money. 2. The system requires endless growth, which means endless debt. There is no fix inside the current model. 3. Understanding this system is your only protection. Those who understand the game survive it. Those who don't, feed it. A final question. If money is debt, if the future is already claimed, if freedom is tied to loans, interest, and approval, then what does it mean to own your life? The answer to that question will define the coming decade. Call to action, natural human. If this opened your eyes, don't let the story stop here. Share this video, discuss it, question everything you were taught about money. And if you want the next chapter, how to escape the debt-based system, comment next chapter. Because the first step to freedom is simply seeing the cage. And now, you see it.